All right, let's dive in. Today, we're talking about a really powerful idea from trader Quint Tatro that pretty much flips how most people think about the market completely on its head. So, if you've ever felt like you're just one step behind, that the market always seems to outsmart you, then you're going to want to stick around. We're going to break down how you can stop trading the chart and start trading your real competition, the other traders. So let's kick things off with a question that I'm guessing drives a lot of traders crazy. You spend all this time learning the classic patterns, the head and shoulders, the cup and handle, all of them. You finally spot one that looks perfect. You make your move, and then it just falls apart. It does the complete opposite of what the textbook said it would do. Why? Why does this happen so often? But here's a thought. What if that's the wrong question to begin with? What if that really clean, obvious pattern that absolutely everyone can see, what if that isn't the actual opportunity? What if the real trade is hiding somewhere else entirely? Now that's the big idea we're digging into today.
See, the problem isn't necessarily that the patterns themselves are broken. The problem is their popularity. I mean, think about it. As more and more people learn the basics of technical analysis from the same books, the same websites, these strategies get incredibly crowded. And when literally everyone is trying to make the exact same move at the exact same time, well, the game itself starts to change.
And this brings us to a really important concept, something we can call technical analysis saturation. It's basically the point where a strategy just becomes a victim of its own success. If thousands of traders are all waiting to short a stock at the exact same resistance level, what do you really think is going to happen? The predictable move suddenly becomes the least likely thing to happen. And this is where we get that big aha moment, that huge shift in thinking. The key is to stop seeing the market as some faceless, abstract thing. You need to start seeing it for what it really is, a big arena, filled with other people, your opponents, who are all trying to do the same thing you are. Your job isn't to outsmart the market, it's to outsmart them. Tatro uses a perfect analogy for this. It's a chess game. A beginner chess player, they're only thinking about their next move, but a master is thinking 2, 3, even 4 moves ahead. They're anticipating what their opponent is going to do, and they're setting traps based on that. In trading, that means you have to anticipate how the crowd will react to a chart, and then you position yourself to profit from their predictable reaction. And make no mistake, the stakes are incredibly high. The source material puts it this way, and it's pretty blunt. If you are following technical analysis, you are either stalking the movement of others or your movements are being stalked. If you don't know on which side you fall, odds are you are someone's next meal. It's basically a predator-prey environment, and you've got to decide which one you're going to be. So, who are you actually playing against? Well, we can break down the competition into 3 pretty distinct levels. And understanding this hierarchy, this food chain, is really the first step to figuring out how to exploit it and find your own edge. This slide really just maps out that food chain for us. Okay, so at level 1, you've got the novice. This is the person who's buying when a stock is plummeting, hoping to catch a falling knife. Then at level 2, you have the semi-educated trader. They know the basic patterns and they use them to follow the crowd. But then there's the level 3 master. They aren't focused on the pattern itself. They're focused on what the level 1 and level 2 traders are about to do, and they profit by being one step ahead of them. Now, I know this might sound a little theoretical, but believe me, it plays out in the real world in some incredibly dramatic ways. So let's look at a classic case study from back in 2009 that just perfectly illustrates this entire concept in action. So I want you to picture this. It's the summer of 2009. The markets had a pretty good run-up, and then this massive textbook head and shoulders top forms on the S&P 500 chart. I mean, it was so obvious it was being talked about everywhere, on TV, in trading forums, you name it. Literally everyone and their brother was getting ready to short the market, absolutely convinced it was about to roll over and crash. But then, the exact opposite happened. Instead of breaking down like every textbook said it should, the market just exploded to the upside. And this triggered a colossal short squeeze. All those traders who were betting on a decline were forced to buy back their positions at way higher prices, which just added more fuel to the rally. They got completely annihilated. And the crucial point, the whole reason this happened, is right here in this quote. The pattern's very own obviousness, its own fame, was its downfall. When you get that many people crowded onto one side of the boat, the situation becomes incredibly unstable. The level 3 traders, they understood this. They knew the trade was too obvious, too crowded. The real opportunity wasn't to short the pattern, but to bet on its failure. So applying this really requires a completely different way of looking at a chart. It's not just about finding patterns anymore. It's about looking at that same pattern and evaluating the psychology of the crowd that's looking at it with you. It is a fundamental mindset shift. And this slide just illustrates that shift perfectly. The basic trader looks at a chart and asks, how do I treat this? But the advanced trader asks a completely different question. They ask, how is everyone else going to trade this chart? And where is the opportunity hidden in their predictable moves? See? It's not about being bullish or bearish. It's about being opportunistic. So we'll end with a question for you to really think about. Look at the strategies you use, the patterns you follow. Are they common? Are they things that are widely known and taught everywhere? Because if they are, you have to ask yourself a really tough question. Is my predictable strategy the very thing that's providing someone else with their edge? And that's the crucial takeaway. Thanks for joining us for this explainer.